So here's the question that realtors get asked a lot. How's the real estate market? I actually have some thoughts about that. My name is Schumann, and I'm a realtor here in the Twin Cities. My channel highlights neighborhoods, what it's like to live here in Minnesota, and what the real estate market is like here. So if that is your cup of tea, please hit the subscribe button and the bell, and you'll be notified whenever I post new content. All right, my thoughts about the market are primarily going to surround the buy side of the transaction, but if you are thinking of selling your home, you should probably listen to this as well, because it does take two to tango, or to complete a real estate transaction. And these are the things that are going to be coming at you from the other side of the transaction. For the past 2 years, we have been in a crazy market that favored sellers, so much so that buyers were getting raked over the coals on pretty much every single transaction. Literally every house was getting multiple offers within days of going on the market. And because competition was so steep, buyers were doing things like waiving inspections and therefore waiving the right to ask for repairs or to back out if the house wasn't in good condition. Very scary with this amount of money being put down on something. Paying significantly over asking price, and then adding escalation clauses to beat the next bidder, offering to cover the gap between what the bank finds the appraised value to be and the price that they offered to pay for the home, and also having to make this huge decision within a really short time of seeing the house. So you didn't really have a lot of time to think about it. This was all driven by incredibly low interest rates and an incredibly low supply of housing. So what are we seeing now? Interest rates have risen, and they have risen a lot. When I checked a day or so ago, they were sitting at around 6.5% for a 30-year fixed rate mortgage. The difference that change in interest rate makes on a monthly mortgage payment can be significant. It can really put a dent in what you can afford to buy. So the median home price, any type of home in the Twin Cities, is $370,000. And if you had to pay PMI, which is private mortgage insurance that you pay when you put less than 20% down, your mortgage payment on a house that was $370,000 with 16% down and a 3% interest rate, like we saw last year, you would be around $2,000 per month, all in, $1,919 to be specific. That same house would have a payment of nearly $600 more per month with today's rate. Is it all doom and gloom? I actually don't think so, and here is why I'm going to put a positive spin on this. Number one is that mortgage rates change. Yes, they go up, but they also do go back down. The rate the Fed charges banks to borrow money has been incredibly low for a very long time, and inflation followed. This is one of the primary tools that the Fed uses to control inflation, the rates. And there are a lot of predictions out there saying that we will see these rates come back down probably within the year. Will they be back at 2.5% or 3%? It's very doubtful, but once inflation calms, they'll see if the economy needs a bump, and that's one of the ways that they do it. So, well, why would buying now possibly be a good idea if you have missed the boat on these great interest rates? Number one is you actually need a house. I mean, people need to move for one reason or another, and that means that people are buying and selling houses even in new economic environments. So you're going to have time to think about your purchase. So days on market for homes here in the Twin Cities area have been hovering around 30 days on market. This is like twice as much as we saw a year ago. Homes still are selling quickly if they are priced well, in a good location, and in good shape. But you're probably not going to have to get into the gladiator ring with the other buyers on a house that's basically a pile of rubble. This is my favorite term about these houses. And worry that its pile of rubble is going to be sold out from under you on that very first day. So you have a minute to possibly take a look at it twice, spend some time in the neighborhood, and consider your options. The current percentage of asking price that sellers are getting for their homes is around 100%. So bye-bye adding $30,000 to $100,000 to the asking price to win out, and then having to add another pile of cash to the transaction in the form of a larger down payment to satisfy the appraisal gap. When you get an inspection, not if, you will be able to negotiate repairs with the seller. There's also the possibility of having the seller contribute to closing costs or contribute to a rate buy down. Real estate is still appreciating at a pretty good clip. Single-family homes have increased in value at about 8.3%, and I don't see evidence of like a housing crash where people will be underwater on their homes. I'm saying the same things that a lot of other people have said, but lending criteria are much more strict than they were back in the early 2000s when you could literally get a loan on a house with no docs. That's right, no proof of income. People are also not using their homes as ATMs, and the supply isn't there to create a glut of housing inventory. If the thought of a high monthly payment has you kind of choking a bit, the option to buy down the rate does exist. There are many ways to do this. It can be a permanent rate buy down or something like a 2-1 buy down. You can buy a lower rate for now as a bridge while you wait for rates to drop in the future so that you can refinance your home at that point. I'm going to do an interview with a lender on this option next week so you can hear about what rate buy downs are and what this might mean for you and how it could help you purchase a house in this new environment. Even though buyers are no longer getting beat up, we are still technically in a seller's market. There is still a lower supply of homes and a greater demand for those homes that are available. So if you recall, the rule is that if there are 5 months or fewer worth of housing inventory, meaning if nothing came on the market, that's how long it would take us to sell all the houses. That's considered a seller's market. 5 to 7 months is balanced, and 7 months or more is a buyer's market. So if we look at the number of homes available in the Twin Cities right now, the rate that they're being sold at, we really still only have 1.46 months worth of housing inventory to sell if nothing new comes on the market. The number of homes actively being marketed is about 6,700. This is an increase of about 500 homes over a year ago, but it's also very close to what we saw at this time in 2020 and almost 3,000 houses fewer than we had on the market in 2019, 2018, or 2017. So we don't have a heck of a lot to sell here. I think that this can feel really confusing if you have a house that's been sitting on the market for a month or more, especially after the crazy inflated expectations that sellers have had from the past couple of years. Now, sellers need to be very mindful of how they are priced, the condition of their home, and this is not the time to be lazy in your preparation. Take the time to make your house shine, look better than the competition, and price it well. You really want there to be a perception of value to attract buyers. One problem that we see with inventory of homes is that people who may be considering selling are likely currently paying a fairly low interest rate on their current home mortgage, and in order to sell and buy another, they may need to take out a mortgage at the new higher rates, and that could be making them maybe think twice. It doesn't feel quite as attractive, so they may not sell unless they actually need to do so. Everything is a double-edged sword. They are trying to cool the market, but as long as supply remains low, there's still going to be a demand. So I think that's all that I wanted to say today, but if you have questions, I would love to talk to you. I really enjoy talking to people that find me on YouTube, so please reach out. My contact information is down below this video. If you're watching on a mobile device, tap the title. That's going to pop open for you and you can find it down there. Have a great week.